The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. All right, and joining us now to discuss the crypto markets is Wes Fulford, CEO and Portfolio Manager at Viridi Funds. Welcome to the show. All right, so we're taking a look at Bitcoin. We're seeing Bitcoin, Ethereum pop up. A lot of the alts are also, nevertheless, some of the losers today are Algorand and Polkadot after yesterday's network failure on Solana. Taking a look at Bitcoin first, what is your short-term outlook on what the markets are doing?
In terms of a price forecast or just in general?
Both.
Yeah, I mean, it's hard to say. I mean, there's a lot of people that try and use technical analysis and using the past to predict the future, but I think, we're only one big tweet away from the next bull run in BTC, trading here at around 47.5 this morning. I think there's a couple things that have buoyed the market this week over the last couple sessions. One, probably Cathie Wood's comments and forecast at the SALT conference where we're sitting today in terms of a 10x over the next 5 years and $500,000 long-term BTC, and then another Michael Saylor announcement, $243 million purchase for another 5,050 BTC on the balance sheet of MicroStrategy. So.
Mm-hmm. And are you in the bullish camp of seeing that exponential growth by the end of the year or in the next couple of years?
Yeah, there's definitely lots of models out there which you could use to sort of forecast price adoption long term. And I mean, the go-to seems to be the Plan B sort of stock to flow model. And I think levels there would suggest that, in a year's time, we're somewhere around 110,000 per coin. And I sit in that camp. What's going to happen in the next 3 months, 6 months, 12 months? Who knows? But I think long term, 5 years out.
Right now we're seeing Bitcoin over the 200-day moving average. It's also getting close to the 180 moving day average, so a bit of resistance there. Taking a look at some of the Ethereum alternatives, they are taking a hit. I wondered, you're an ETF guy. Do you see a correlation developing among these Ethereum alternatives?
Yeah, I think looking at some of the leading like Cardano or Sol or I think there's a need for other protocols like that, and a lot of them are being spurred right now by the boom in NFTs, and a lot of them are have better components in terms of tech, proof of stake, proof of history. There's a need for scalability and a real use case for some of these. I personally a little bit of a Bitcoin maximalist. Always have been. I've been through lots of market cycles like this, and I think when you have issues with altcoins like Sol has experienced yesterday, it only sort of fosters adoption for some of the market leaders. You see some strength in BTC and people moving out of the riskier classes and rediversifying into the market leaders.
So do you see folks moving back to the majors after a bit of volatility in the alts?
I do, yeah. I mean, at the end of the day, right now, people are just clamoring to participate in the ongoing boom and looking at long-term portfolio strategies in terms of hedging against inflation and stimulus printing tied to COVID and pandemics globally. So,
okay.
Yeah.
Well, you mentioned this. You're an ETF guy with the U.S. Clean Energy Crypto Mining ETF, RIGZ. Tell me a bit about what kind of volumes you've been seeing since the launch of RIGZ.
Yeah, so we launched RIGZ on the NYC about 7 or 8 weeks ago. Was our trading debut. Yeah, it's an actively managed fund focused on investing in the infrastructure that underpins the protocol. Bitcoin, Ethereum primarily as the publicly traded miners being their coins of choice. Funds up about 49% in the first 8 weeks, or in terms of share price, and adoption has been strong. I think all kinds of reasons why you want to buy a miner in terms of leverage torque to the underlying commodity, the growing digital asset inventories on the balance sheets of these miners, and the ability to produce BTC significantly below spot. If you're running new-gen hardware at industrial scale pricing, you're producing BTC at 90% discounts to where it's trading right now.
And actively managed. So with the regulatory environment right now, how are you allocating the companies in your ETF? What's the thesis behind that?
So we only hold globally publicly traded cryptocurrency miners and semiconductor companies. All of these are public equities. They've passed the sniff tests, the regulatory requirements of the SEC and other leading regulators globally. And unlike the Bitcoin or digital asset ETFs that are still sitting in limbo waiting for approval or a final decision from the SEC, we're investing in equities. They've already gone through this process. So yeah, I mean, I reside in Toronto personally. We're a little bit further ahead in terms of like nascent, in terms of nascent marketplaces. There's, there are publicly listed Ether and Bitcoin ETFs on the Toronto Stock Exchange. So,
right, and Canada has been much more receptive to ETFs in the market. Do you see the potential for the U.S. warming up to a Bitcoin ETF or an Ethereum ETF in the future? What is the regulatory environment in your opinion?
I do. I mean, the recent announcement with VanEck's ETF filing is interesting because I think the way the framework works here in the U.S. is the SEC is allowed to delay a decision up to 3 times. So November will be the finality, the deadline for approval or disapproval of that potential listing for the VanEck product. I think it's a matter of time. I mean, and if the U.S. doesn't move, other global markets will continue to move. And
that's very optimistic. But when do you think that will happen then?
Well, it already happened in Canada. I mean, February we saw the purpose and evolve ETFs, and there's a really big advantage to being a first mover here.
When do you think it'll happen in the U.S.?
If I were a betting man, and I would say late Q1, Q2 next year.